Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Today was just super up green day. Everything's great, right? Wrong. We're going to tell you why in this video. Let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. So Bob, not everything is as rosy it might seem on the surface with this market, even though it was up a lot today, huh?
Yeah, I mean, look, don't believe the headlines here. It's the end of the quarter. JP Morgan was rolling their big collar out, which protects the mutual fund that they have running, and you get all kinds of crazy things. And plus, the quarter has been positive, so they wanted to end on a positive note and get everybody from freaking out over the banks. But the bank problem's not fixed, Phil. We're going to show you a couple charts here that are going to show you that when the market's under stress, certain things happen. I want to show you the first chart I want to show you is, I'm going to blow you away here. This is the dollar. So we've been talking this week, and all my friendly trolls on here and saying the dollar's going to collapse, dollar's going to collapse, dollar's going to collapse. That's what an ascending triangle looks like, and that baby is going to pop the top. And when the dollar pops the top, you have an inverse relation with the stock market. And so this dollar is getting stronger and stronger and stronger, Phil. And remember, big money needs big days like today to basically create what they call exit liquidity. In layman's terms, it's called sold to you, okay? Meaning they just can't. They need to move. They need to sell as the market goes up, because they can't sell when the market goes down, because they'll create a crash. And that's not their intention. They want to actually pass on you thinking you bought the nicest home in the neighborhood, at the high of the market. Okay, and the dollar's telling you that there's stress out there, so people are buying the dollar. Now I'm going to flip to the stock market. I'm going to tell you what they're buying in the stock market, and this should blow you away. So Yahoo just came out with a thing, and basically 12 stocks out of the S&P 500 is 88% of the gains. How about that, Phil? That's it. So basically, you're walking over an arch bridge, and the surface looks awesome, but underneath, the bricks and the concrete are falling into the river, and at some point it just gives way. And so this is what they call narrowing of breadth. And so on the surface, everything looks good, and then what happens in these markets, Phil, is that you usually lose, and we did the Eiffel Tower video I think this week or earlier this week as well. You lose about 80% of what you gain in half the time. So, you can have a market that's going up for 6 weeks straight, and in 2 weeks you lost everything. Mm-hmm. Okay, and you're lucky if you eke out a gain on it. And then the third chart I want to show you, and I'll let you speak to it because you follow this thing dearly. Is that before we get to that chart? Look? Let's talk about the setup. We're getting round 2 on the banks. Okay, the bank stress is increasing.
Yep.
Okay, and when banks are stressed, they don't lend, they park their money. And I'm going to throw it to you, Phil, and you want to show them this chart. It should blow you away, and I'll let you explain it.
Yeah, so what this chart represents is the blue line is what we call reverse repo. And what that is where the banks will park their money overnight. And typically is when they drive the balance that's being parked at the Fed overnight. If they drive that balance higher, it's less money going into the stock market. And so it has an inverse relationship with the stock market. So on this chart, when you can see the blue line going up, this orange line is the S&P 500. And you can see that the more this rises, the lower the market goes. And then vice versa. If it starts to drop, then the market comes up. So you can see how we have this inverse relationship. You can ignore this little spike in the middle because that's the year-end adjustments that they do. So just kind of pretend that isn't there. Just follow the lines without that. But notice what's happening here is that reverse repo is spiking up, going to the highest levels that it's been at this year since we rolled over after this area here. So this is the highest level in 2023 that the reverse repo numbers have been at. That means the banks are parking the least amount of cash into the markets right now. So you're asking, well, why is the market just going up vertically here? Well, like Bob said, there's month end, quarter end. There's large JP Morgan, like he said, has a very large options position. We're talking hundreds and hundreds of millions of dollars. And they take that off and it kind of acts as a release. So it's not really like money coming in buying. It's more of unleveraging or de-hedging. And so the effect is that there's a lot of short covering. And so it's really just a matter of like margin moving the market versus people coming in and buying, if that makes sense. So it's more a short covering rally versus raw buying. Okay. So there's a big difference in how those markets move up. And you'll notice too on this rally, I don't have it here, but the volume is tapering off. And that's how all of these rallies that we've been getting since the top have been ending. They end in very low volume. And that's typically what we see in short covering rallies. There's just not a lot of buying going on underneath the hood. So what happens here is that if you look at where the reverse repo is, this blue line, if we go back to where this was, this is the same level we were back in September now, okay? Where banks were taking money away from the market. Market was trading down here at around 3,700 to below, down to low 3,600s. Okay. So that tells you that relative to what the banks are doing, this market is way over its skis. And I know we've been banging on, being complacent in this market and be careful. And yes, this market's been going up for the last couple of weeks, but it hasn't really changed much in the fact that what's going on behind the scenes is basically setting up for a rug pull on this, okay? And this should jump out at you because this hasn't, since the bear market highs, we haven't seen the market and reverse repo jump up together like this ever before. And there was a lot of weird things too, right, Bob, about today, about just unlike the other quarter ends, today was just doing a lot of weird oddball things. And I think a lot of the stocks you were looking at really weren't confirming. This was more like an index driven, just down to like, 4 or 5 stocks really driving this, getting just squeezed, but not really like broad-based buying across the markets, right?
Yeah. So, I mean, when I looked at the first hour of the market, my entire watch list, and then I went and checked all my long-term portfolios. And I think I was joking. The only stock that I own, and I probably owned 40 or 50 stocks, the only one that I was down on was my hedge. Was SARK, and I'm like, well, this isn't right. This is not normal. This is some sort of a driven event. And by the end of the day, I was back down to 50-50. In terms of the watch list. Now personally, just so people know, I'm heavy on the energy. So energy had a big spike today, and heavy on the shippers, and they had a spike. But they've been soft of late, and so it was a really weird, interesting day. The other thing too, Phil, is that Virgin Orbit just ceased operations. Whoosh. Can't get funding. This is just the start, guys.
Right.
You have something to talk about too on the crypto side about somebody blowing out of the U.S. market. You want to really share that real quick? You want to hold on that?
Well, no, Bittrex, which has been a long-standing domestic exchange, is basically said, based on everything that's going on with the regulations and everything, they're leaving the U.S. market, right? And I think we're probably going to be left with like Coinbase and Gemini at this rate, but the smaller players are getting chased out. And you and I were talking about that, and it just seems like this is just, we're going to get into some of this in tomorrow's video about how the larger banks are just basically trying to get as much of the banking, whether that's banking for crypto or banking legacy or even crypto exchanges, because Fidelity's gotten into the game, right? So you can see like what they're doing. They're trying to make it very hard for anybody that isn't an incumbent in the banking industry for the last couple hundred years. They're saying, sorry, we're taking over, basically. Because make no mistake, they saw what FTX did. They've seen what Coinbase and Gemini have done. They've created these multi-billion-dollar companies over the last 7 years or so. They want that, and they know that it's not going away. There's all this, they're scaring everybody. They're scaring the children. Once they got their arms around all this, and once they've assimilated more banks, and they've really got really concentrated the banking power into the big 8, you watch. All of a sudden it's okay to trade crypto in the US because they're going to be making all the money off of it. So it's just one of many things going on right now. If you're not paying attention, and tomorrow's video is really going to piss everybody off, Bob.
Yeah, it's amazing. And the assistant treasury secretary She said, basically, don't blame Bitcoin to Congress. Don't blame Bitcoin for the bank failures or the bank stress or the bank crisis. Nothing to do with anything. Bitcoin's being protected here by the deep state and by the federal government. And, we have our own conspiracy theories as to why, but not too much on the alts. The alts are being chased offshore, if you noticed.
Yeah.
So better be careful, and also keep an eye on your VPN too, because they're doing something crazy here with the internet, with these internet rules with TikTok. And so just keep all that stuff in the back of your mind here as you manage your portfolios. But I'm more of a Bitcoin maxi in terms of crypto than anything else, and I love the crypto miners that mine Bitcoin. So I think it's going to be good. And look, first quarter, Bitcoin and bullion. Maybe that should have been the title of our slide. First quarter, Bitcoin and bullion. So recognition is happening here, guys. But the general market is going to seize up at some point because there's going to be no bank credit to drive these businesses forward, and their cash flows are going to fall. So I think we'll cut it off there, Phil, before we do a 4-hour podcast today.
We'll save it for tomorrow. Anyway, thanks guys for watching. Please hit like and subscribe. Make sure you got that notification bell set. You're not going to want to miss tomorrow's video. It's something that you guys really need to be paying attention to, and it's going to be upsetting, but we're also going to tell you how you can benefit from all of it. So stay tuned for that. Thanks for watching. We'll see you on tomorrow's video. Bye.
Trade Genius.